For decades now, Europe has been the beneficiary of a burgeoning automaking sector. Germany has been at the forefront of global engineering and France not too far behind, with the UK benefiting from being the European home for the likes of Honda and Nissan. Is the party over for the European automaking sector? Will Hobbs is CIO at Barclays Investment Solutions and he joins us. Will, welcome. Do you agree with this assessment? I mean, or is there a cyclical event going on here, or do you think there's a more structural problem with the European automaking sector?
Oh, well, Jeremy, and I would say actually broader global automaking sector, there are huge, both cyclical and structural sort of things to consider for investors. If you think on the cyclical count, maybe underlying trends in demand are being, or the weakness of underlying trends in demand are being a little bit exaggerated by some of those one-offs towards the end of last year. You know, I'm thinking about the retooling of the European auto sector for one, but underlying demand is weak. And then you look to China, they had a very sharp downfall through the end of last year in terms of auto demand. Again, underlying demand may be a bit less weak, but certainly there are cyclical headwinds, and we're approaching the end of the cycle for the automaker. And then you get to the structural stuff, and you think about, you know, electric cars, autonomous nodes as your future means of transport in cities. And the real problem there, if you think about it, is looking at some of the latest designs of these kind of nodes, is there's really no room for the brands to shine, to add margin, so to speak, instead of styling.
When you talk about retooling, are you talking about move from diesel, which of course has been very popular within Europe, to petrol, or are you talking about combustion to electric? Because, as you said, Asia certainly appears to be at the forefront of that, which is where the focus appears to be at the moment.
Well, there's something else as well, if you think about it. So there is also a move towards new emissions testing towards the end of the second half of last year. So that meant that the European auto sector, not only did they had to retool their facilities, but also that created a huge chunk of inventory, which again hit margins, so on and so on. So that wasn't the only game in town.
Talking about what's happening here in the UK, I mean, the UK for many, many years has not really been at the forefront of new engineering. And of course, we've been riding very much on the back of, as I said, likes of Nissan in Sunderland. Of course, the southwest, we've got the Honda facility, which have both hit the headlines recently. Both automakers saying it's not specifically Brexit, taking those two car manufacturers back home to Japan. What do you think is the issue here generally about how the West is perceived for automakers?
Well, it's interesting, Jeremy. I mean, that news itself, I mean, it just depended what you voted back in 2016 as to what you believed. There is other stuff at play here, and I think that wider global context is important, because what it's making many is producing some very bizarre or unheard of kind of conversations in the auto sector itself. So you think VW is now going with Ford into producing a line itself, BMW, Mercedes, who have 100 years of sort of mutual antipathy between them, are now seen to be talking. There's the potential for a huge bout of Megamergers in the global sector, as people really, or the auto manufacturers, try to get to grips with a kind of 10-20 year view ahead, which doesn't look that benign, or looks very very difficult for them.
That is an interesting point. I mean, we've seen the case of the big fall of Carlos Ghosn recently, when he was one of the original proponents of joint ventures with, of course, Nissan and Renault, which all seems to have fallen apart. But are you saying this could actually be something which many automakers will be looking to? Or do you think ultimately what we'll see from the likes of China is completely new automakers coming in with a new product, as you said, giving us a new way of transportation?
Well, very difficult to predict on the long-term view, Jeremy, I would argue. But what you certainly can see is that automakers are thinking quite inventively about how to get to grips with the demand trends that they see coming ahead. So if you think about it, if you assume by 2025 that 9 to 10% of the global auto fleet is going to be electric, that suggests that in terms of your internal combustion engine, your next peak is going to be 10% lower than the previous one. So that suggests you've really got to start thinking outside the box. Now, alongside that, 10 years hence, like I say, you could well have your means of transport in cities could be these autonomous nodes with no real ability to brand or add margin through that means. So these guys have really got to think very carefully about how they're going to make their money going forward.
Yes. So you and the sector and your clients, are you steering away, forget the pun, from the likes of BMW and Daimler and Ford as well in the States, General Motors, that sort of thing, to the new incumbents, or are you still happy that they've still got a lot to offer?
So in terms of, this is a sector where we're still very much taking a benchmark position. So all of that we've just talked about about, that is in some very low multiples if you look at PEP to forward earnings. And the point is, I think that some of the offset to some of that gloom that you're talking about at the sector level is that China may well start to turn around a little bit. Now, share prices in the global sector are very much driven by what's going on in China. And if China does start to pick up a little bit and you find that the actual underlying trends in auto demand are not as pessimistic as those end-of-year figures implied, where some inventory destocking was definitely evident, then you may find that the sector does pretty well. And it is cheap, like I say, or it is inexpensively valued, or very low multiples, whichever way you want to cut it. And that suggests that there is an opportunity there, but it is a very risky one. And this is, for our part, we still focus on areas where we've got a little bit more confidence in the 12 to 18-month outlook.
Yeah, one thing we haven't touched on is the potential for US tariffs on European-made vehicles. Do you see this as a real threat, or do you think ultimately we're going to get to the last moment and there's an agreement and the friendship is reinstated? Well,
again, as with many things at the moment, you want to be wary of knowledgeably second-guessing when the main protagonists don't know what's going to happen next themselves. There is some feeling in the US that Congress are trying to recapture some powers in terms of tariff imposition, particularly with regards to the Section 232 investigations, which is what's being used in this instance. And there are also some sort of industry experts who argue that if tariffs are put in, and they would be punishing for European earnings, there's no doubt about that, but that they would be very quickly removed. And eventually you may find yourself going towards zero tariffs between the US and EU, and that will be a positive for margins. So all of those things are on the table, but I think the biggest story for the sector is not so much about tariffs, it's that sort of existential challenge and the potential for mass consolidation, which could be quite interesting for investors.
OK, look, well, it's a pleasure. Thanks indeed for joining us with a quick scoot around the European auto sector. Will Hobbs is Chief Investment Officer at Barclays Investment Solutions.